Hey guys, today I'm going to be sizing up Texas Instruments. This is one of my favorite dividend stocks. I've held it for a number of years, but I want to walk through some of the charts, some of the data that really drew me to this stock. Because listen, as a dividend investor, you want to pick companies that can continue to raise their dividend year after year. Let's get into it now. So here I am, I'm at their website. This is ti.com. And listen, Texas Instruments, I'm sure a lot of you are familiar with them, but they basically have analog switches. They've got processors. I remember when I was in grade school that they had the TI-83 calculator. So they've been around. They've got a lot of great products. Technology isn't slowing down anytime soon. So now let's head over to their investor relations page, which, by the way, listen, if you're going to get involved in stocks, one of the best resources is going to a company's investor relations page. It gives you all types of information, data on the company, everything about the stock that you want to learn about. So here we are. Let's just look at a couple of things about Texas Instruments. And I want to start with the free cash flow per share. So this is really big, right? Because when you are investing in a company, you want to make sure that they have a lot of cash, right? A company that spends off cash is able to reward its shareholders. So here we are, we can look at this amazing chart here. And this is showing that from 2004 to 2021, free cash flow per share has been in an upward trajectory, okay? And in fact, their free cash flow margin was 34% as of 2021. And listen, when you've got a lot of cash flow, that means that you can potentially raise your dividend, you can buy back shares, you can do a lot of good things for shareholders. So they've got a lot of free cash flow. What can they do when you are a company that spends off a lot of cash? Well, they can reduce their share count. So check out this next page. Here we are. We can look at stock repurchases. And really, Texas Instruments has been really all about reducing the shares outstanding, right? And in fact, since 2004, they have reduced their share count by 46%. So think about that as an investor. What does that mean? That means that there's less shares outstanding. That means that their earnings can go up per share, right? And this is just really showing the power of a lot of excess cash and how they can reward shareholders. So here we are, they're spinning off a lot of cash over the years. They've reduced their share count, right? So that is really going to help earnings and really benefit you as a shareholder, right? Warren Buffett loves it when companies are buying back their shares. And he also loves when they are growing their dividend. Check this out. So Texas Instruments has consecutively been growing their dividend for 19 years. And since 2004 through 2021, they have grown their dividend 25% compounded annually. Okay, this is incredible, right? Very few companies can say that. So in 2004, the annual dividend was, almost 9 cents per share. Fast forward to 2022, and it's at $4.96 per share. So this is huge dividend growth. And if you're a dividend growth investor, you want to find companies with a history of growing their dividend. Clearly, Texas Instruments has been rewarding shareholders for a number of years. And listen, when they are that profitable as a company, they can just raise their dividend year after year. And that's what you want. You're worried about inflation. Find a company that can continue to beat inflation over time by raising their dividend. And Texas Instruments is one of the few companies that can say that they have raised their dividend for 19 consecutive years. So listen, I do want to point out that you don't want to invest in Texas Instruments just based on this video. You got to do your own research, and obviously you want to diversify amongst other dividend stocks. So really what I'm trying to do is help you understand and how to potentially pick, dividend stocks that are going to continue to raise their dividend year after year. Make sure to like and subscribe if you enjoy this content. Let's keep going. So let's go ahead and look at Texas Instruments stock. Ticker is TXN. The price is right around $166 per share. On a 2-year basis, it's been relatively flat. But remember, dividend investing is about finding dividends that continue to grow, right? And TXN has been doing that, as I showed you. So here, this chart is outlining all of those dividends. So the last one that they paid was $1.24 per share. And you know what? If we go back in time, we look back, say July of 2021, it was $1.02 per share, right? And then if you go back to 2019, it was 77 cents per share. So while the stock is doing all these things, it continues to pay you to hold it. Now we can see the dividend yield is right about 3%. That's very attractive compared to the market, which is about 1.7%. And then you can see that their PE is 17.3. So it's not too elevated. I like to look over here at their next 12 months PE. It is even more elevated at 20.77. So it is more expensive than the market. However, it is a quality stock and it's got free cash flow yield of next 12 months of just over 3%. And you know, this is a solid, fundamentally sound company by the numbers. And then last but not least, you know, Map Signals is all about following money going into shares. Here we've got a chart going back to 1990, and it is showing that TXN has been in an uptrend, and these blue signals are indicating that there has been institutional support for the shares, and it's ranked very well fundamentally. So this was a big time growth stock in the 90s. The early 2000s, you got some of those buy signals. Same thing happened here in 2018. But the point is, it's up and away over the long term. And when it is packing big dividend growth, that is a winning recipe over time. Well, I hope you found this video entertaining. What I wanted to do is not only just showcase how strong Texas Instruments has been over the years and why they've been able to raise their dividend, but hopefully you, if you're trying to construct a dividend portfolio, you can look at some of these, fundamental characteristics that I showed you. That's going to better help you zero in on names that are likely going to continue to raise their dividend year after year, just like Texas Instruments. Just remember, none of this is personalized advice. You guys got to do your own research. Check out mapsignals.com if you want to follow the big money. I'll see you guys next time.